Hello and welcome to the second annual Progress Palm Beach County Economic Summit. This is our third and final session of the program. For those of you who have been participating on all three sessions, thank you so much. And for those of you who are just joining us, I'm Mary Lou Bedford and I am the CEO of the Central Palm Beach County Chamber of Commerce. On behalf of our chair, John Carter, our board of directors, and our staff, we thank you for your participation today. Although we are virtual because of COVID-19, our content today has been very informative and impactful, and our next segment coming up is just the same. We have industry leaders who are going to be sharing information about finances and how the financial service industry has met the needs and providing information to our community and businesses through this pandemic. I just want to share with you a moment of thanks to our supporters of this event. We could not do it without these great community and business partners. So thank you to Amerant Bank, our presenting partner today. Thank you to Florida Public Utilities, our corporate sponsor, to our community sponsor, Minto Communities, and our Progress partners, CEO Financial Services and Wellington Regional Medical Center. Thank you all so much. We truly appreciate your generous support. We could not do this without you. At this time, I'd like to introduce our executive board member of the Chamber, Laura Trosclair. Laura is the Executive Vice President and Retail Banking Manager for Amerant Bank. So Laura, I'll pass it on to you.
Thank you so much, Mary Lou. So it is my pleasure to introduce our keynote speaker today, Mr. Alex Sanchez. Alex serves as President and Chief Officer of the Florida Bankers Association. Founded in 1888 and located in Tallahassee, the FBA is the leading voice for Florida's banking industry. Alex's responsibility include representing and advocating for Florida's banking industry before our legislative and regulatory bodies in Tallahassee and in Washington. Before joining the FBA, Alex was an attorney in Sinclair Lewis, a Miami-based law firm specializing in business law, Consolidated Bank Assistant General Counsel, and Florida Department of Commerce General Counsel. From 1989 to 1993, Alex served as senior corporate attorney for GTE Information Services in Tampa. In August of 2019, Alex was appointed to the advisory board of directors to the Ex-Im Bank based in Washington, D.C. Ex-Im is an independent federal agency that promotes and supports American jobs by providing competitive and necessary export credit to overseas purchasers of U.S. goods and service. A robust Ex-Im can level the global playing field for U.S. exporters when they compete against foreign companies that receive support from their governments. Ex-Im also contributes to U.S. economic growth by helping to create and sustain hundreds of thousands of jobs in exporting businesses and their supply chains across the United States. In recent years, 90% of the total number of agencies' authorizations has directly supported small businesses. With that, I'm going to turn it over to Alex Sanchez. Alex?
Can you hear me? Hey, Laura, thank you. Thank you for that warm introduction, and thank you for Amerant Bank for all you all do. And thank you for sponsoring, this event here today. I really, it's an honor to be with the Central Palm Beach County for this economic, the chamber for this economic summit. I miss going to South Florida. God, I'm here in Tallahassee. This is my office here. I miss heading home to South Florida, where I have many family and friends, and hopefully that will happen soon. I want to thank Yvonne and Deborah, Yvonne at Amerant Bank and Deborah at the SBA for all their efforts during the PPP process. Thank you so much. Johnny, thank you for helping me with the logistics here and to make sure that I got on. Mary Lou, great to hear you this morning. There's many things I'd like to get into, and certainly the PPP is one of them for our small business owners in the heart and soul of Florida's economy in the Tri-County area of Florida. Of course, South Florida is so important to Florida's economy. But first, let me just say, I hope everyone read my op-ed that was published by the Tampa Bay Times on Saturday, that Real Clear Politics picked up and it went national on how Florida is doing in the reopening of our economy, and at the same time, obviously fighting COVID-19 and keeping our citizens safe, and very difficult balance. And I think Florida is doing it the right way. I commend the governor for his leadership and his program of safe step-by-step. It's not all about the economy for him. If it was, all of Florida would have been in phase 3 months ago, but it has not been. South Florida just got moved up to phase 2 last week. They were in phase 1 for months. The rest of Florida has been in phase 2 for months as well, as we, continue to combat this pandemic virus. That it's very serious, obviously. We all have to do our part with masks and social distancing, but we can reopen the economy. We cannot keep it closed, and I think Florida is a leader in that. And I look at states like California and New York that we just can't have big box retailers be the ones providing services and products to the public. We've got to help the small business owners out. These are men and women who have put their dreams and their heart and soul into forming these small businesses. And as we have shown in Florida, they can be open while, going by the guidance of the CDC and the wearing of masks and the social distancing. Small business owners too can be open, not just the big box retailers. So I commend the governor for his program. He's been very methodical, looking at a lot of medical data. He's been traveling around the state of Florida each and every day, meeting with medical experts, with us citizens, to see how the state is doing. And I think we serve as a great example on how it can be done. It's a very difficult decision, but it's one that we needed to do in Florida, and hopefully other states will follow suit. So I just want to make a comment on that. On the Paycheck Protection Program, when it started on April 3rd, it was hell on wheels. There was a lot of issues. We were asking the Small Business Administration to get out, $500 billion within 45 days to small businesses around the country, when the agency had maybe given out in 7A loans, $50 billion in a year. That was a heavy task, but when it was all said and done, it happened. And I want to thank our bankers who worked around the clock processing tens of thousands of PPP loans to help small business owners in our state. To every small business owner listening in on this forum, my piece of advice is this. One of the takeaways from the PPP was relationship banking, and it was the FDIC banks. Let's be clear about this. The FDIC banks are the ones who process these loans, not other type of financial institutions. It was the FDIC banks. And one of the takeaways was the importance of relationship banking. I strongly recommend to all small business owners listening in, call your FDIC banker tomorrow. Go to lunch, go to breakfast, have a Zoom call meeting if that's what you need to do. But make sure you have a relationship with your FDIC bank. I think that is essential in today's environment, and the Paycheck Protection Program is a great example of that. And You know, when you have an issue, when you have a problem, make sure you're able to pick up the phone and you know who your banker is, and your banker knows who you are. So very, very important. Why? Because at the end of the day, the PPP created over 5 million approved loans for small businesses, which were about $525 billion in round one, round two in approved dollars for small businesses. For us in Florida, what did that mean? Well, in Florida, there were 432,000 small businesses that were approved for a PPP loan, and over $32 billion was brought back to help the Florida economy during this COVID-19 pandemic virus over the 4-month or so period at hand, you know. And think about that. $32 billion was injected into Florida's economy to help these small business owners as a bridge to overcome what occurred to their small business, which is no fault of theirs, especially during those months of March and April, when most of our small businesses and most of our economy was closed, and everyone stayed home. So that was a big injection of capital into our state to keep our state afloat and keep our economy going. And I'll tell you, let's thank those who were very involved in the creation of the Paycheck Protection Program. You know, let's start with, of course, the president, thanking the president for his leadership in this regard, Treasury Secretary Mnuchin, Florida Senator Marco Rubio, who wrote the legislation, also gained the support of our other senator, Senator Rick Scott, who was very important, our House members on both sides of the aisle who were supportive of this legislation in Congress. So I want to thank them for their leadership, because, you know, this was very important to help these small business owners survive. And I know, you know, it's been a tough time. It still is a tough time, and we're not out of the woods yet. But hopefully, our nation's unemployment rate now is down to 8.4%. It was in the high 20s, as you know, in the heart of the pandemic. And I'm looking forward to the unemployment numbers during the first week of October. Congress still has to work out another deal, I guess you can say, on COVID-19 relief. And, you know, there's been a lot of talking on both sides of the aisle. No deal yet, but I think one will be struck here between now and the 30th. Congress, by the 30th of September, has to work out another deal to keep the government open. And I think at that point, they will announce one big deal to keep both the government open and also COVID-19 relief. And there seems to be slow progress, but progress nevertheless each and every day in Washington as both sides of the aisle meet. And it looks like, you know, the House wanted a $3 trillion relief package, and the Senate, you know, proposed a $650 billion relief package that just failed last week. It looks like they may meet somewhere in the middle. Surprise, surprise, right? Where it may be $1.5 trillion package, I should say, that will do several things. One, and I think, again, the small business owners, please take note, in this COVID-19 package, we're hoping that there'll be relief for all PPP loans for the small businesses that obtained a $150,000 or less PPP loan. We're hoping there will be automatic forgiveness, which if that is the amount that they set, and we hope they do, that would automatically forgive 85% of PPP loans made to small businesses across our great country. And I think that would be good. Small business owners don't have the time to fill out long federal government forms. They're running a small business. That two-person flower shop is doing everything they can to meet the needs of the public at this hour. They don't have time to take hours to fill out complicated forms. So I hope Congress will adopt this. I hope Congress also will have liability protection language in the next relief package to make sure that our universities, our schools, our businesses are provided liability protection against lawsuits in this COVID-19 environment. And I think that's essential too for small businesses that be included in the package. There's also talk about creating a $200 billion fund to help those small businesses that can show real severe, losses because of the pandemic, and to allow them to apply for a second PPP loan to help them stay afloat and stay in business. So we hope those are the, and I'm confident that those will be some of the items that will be in the next PPP loan, relief package in Congress as part of an overall COVID-19 relief package that Congress on both sides of the aisle and the president will support, and the president will sign into law, and so we can get these monies back out in the economy, and to help small business owners survive and get to the other side, to ensure and help them survive this pandemic. So interesting times. Obviously, we've never lived in a time like this. And I can tell you, if you're a homeowner, if you're a business owner, and you're suffering through this pandemic, please, again, make sure you stay in close touch with your FDIC bank, whether you have a home loan or a business loan. Our banks have been working with their customers to help them get through this since early March, since the early part of this year, restructuring loans. And helping their customers get through this. And that's what our banks want. Our banks are a reflection of the local economies they serve. If their customers do well, our banks do well. So if you're experiencing any difficulties, please stay in touch with your banker. Let he or she know what your challenges are. Work with them in a forbearance way to ensure that that our banks can help you. That's very, very important. I ask you that to stay in close touch with your banker. So looking forward to questions later on in this excellent program today. And we're all going to get through this. And really appreciate the men and women who are working in our hospitals, our first responders, everyone who helps the public out. They really are incredible heroes, including our men and women in the military who continue to serve us, pandemic or not. They're always there for us. So we're going to get through this. Let's stay safe. Let's stay well. Let's respect the guidance of wearing the mask, of social distancing. And I'm confident if we do that, along with the great companies that are working on vaccines that should be out soon, we can get through this safely together as a nation. Thank you.
Thank you so much for those words, Alex. So at this time, I'd like to introduce the rest of the members of our panel. First, Deborah Salas. Deborah is the lead lender relations specialist, brand manager, and youth entrepreneurship financial literacy liaison for the U.S. Small Business Administration. Recently, she worked as VP Director of Small Business Lending for Neighborhood Lending Partners, a nonprofit CDFI within the state of Florida. She is responsible for executing their SBA Small Business Loan Program goals by conducting business development, marketing, and community outreach activities throughout the state. Prior to joining NLP, she worked in the nonprofit field in academia, as well as owned and operated small alternative lending mortgage brokerage business in Miami that served customers who did not typically qualify for traditional financing. In 2017, Deborah was awarded the SBA Financial Advocate of the Year for the state of Florida and for the South Florida District. Deborah has been actively involved within the community, serving on the Miami-Dade Bridge Loan Committee after Hurricane Irma. Beacon Council's Small Business Committee, Goldman Sachs 10,000 Small Businesses, the SBA's Emerging Lender Program and its Boots to Business, FLA GGLS Small Business Lenders Forum, and the SBDC's Women in Business Program. In 2019, Deborah was invited to speak in a bipartisan Congressional Small Business Committee in DC about the SBA's Community Advantage Program. She earned her bachelor's degree from Hunter College and master's degree from New York University. So welcome, Deborah. The last person on our panel, Yvonne Buchanani, is a peer of mine at Amerant Bank. Yvonne is one of the industry's most seasoned SBA specialists, having been with Amerant for more than 25 years. She is responsible for all U.S. Small Business Administration, Ex-Im Bank loans, and any enhanced assignments related to trade finance for the bank. In her role, she works with the bank's network of branch managers and commercial and middle market lenders to acquire SBA loans. She serves as the liaison between the SBA Certified Development Company and the lenders, and is responsible for writing procedures, processes for the application approval and closing of SBA loans for the bank. She is involved with the loan origination stage, underwriting and closing, and is responsible for the annual reviews and 1502 reports for SBA loans. As Yvonne's experience has been integral to the bank's clients and the community as a whole, in working with the various facets of the CARES Act, specifically the Paycheck Protection Program. Her expertise has helped small businesses capitalize both on PPP opportunities as well as other SBA programs. So welcome, Yvonne. So we have a series of questions, and the things we want to talk about today, we actually went out and talked to our customers and members of the community, to get their feedback on things that they would like to talk about. And anybody who knows me knows that I got this little bit of a competitive nature. So my very first question is going to be for Alex. Alex, you talked about how Florida had gotten $32 billion in small business relief funding. My question is, how does that compare to other states? Did we do better? Are we like number one? Where do we stand?
Well, Laura, thanks to bankers like you and Yvonne and Deborah, let me commend Deborah at the SBA who, how many government officials do you know that work for our federal government who takes phone calls on a Sunday? And as when this started on that April 3rd, that Friday, it was, like I said, hell on wheels. I mean, the SBA portal could not handle, thousands of banks processing these loans, but they did. And thanks to people like Deborah, who helped a lot of our Florida bankers get on there to process loans to help our small business owners, Florida finished number 2 in the nation, Laura, to California in the number of approved loans, which was amazing. We're the 3rd largest state, yet we surpassed Texas, and we were 4th in the nation in the amount of approved dollars, behind California, Texas, and New York. And the only reason New York beat us, even though we had 80,000 more loans approved for PPP processing than New York, is because it's much more expensive to operate a small business in New York. And that's why their loan amounts were higher. So 2nd in the nation in total amount of total loans, and 4th in the nation in total dollars. So it's amazing because of, again, our FDIC bankers process these loans around the clock weekends and all. And then the following weekend was Easter weekend when it first started, and people are still working around the clock. So very proud of that's why it's so important. Stay in touch with your FDIC banker. And for me, I stay in touch with the SBA and Deborah because they did a great job. They really, really did. And she did too.
We did. Yvonne or Deborah, anything to add to that?
I do remember talking to Debbie really late at night on the weekends. Even Alex and I were texting, I don't know to what time at night. It was a madhouse. I truly recall that it was a madhouse. But you know what? Through the collaboration of all of our industry leaders, Debbie, Alex, people from the local CDCs as well, we made it happen. We really did.
Great. Thank you so much.
So I would just say that, I'm your biggest cheerleader because I work with my role specifically with all the lenders and the banks, and we could not have done it without you all. It was a unique situation of public and private, collaborating together to help our communities and our nation as a whole. So the PPP really was a lifeline to a lot of small businesses. And I'm glad we're done with the Saturday and Sunday calls for now, but who knows how that could turn out. Sometimes we get a little break.
Well, I can tell you from my own perspective, having been one of those people working until 3 a.m., that it really was about our communities and the small business owner. I personally can remember, saying, I don't know if I can do anymore. I don't know if I can do anymore. And it was like, these businesses need our help. And so it was a very exhausting but rewarding experience. And so let's move to what comes next, which is, the forgiveness part of the PPP. We're getting a lot of questions from our customers about when are they going to be able to start submitting their applications. I know that at Amerant Bank, we're basically starting this week, but a lot of folks that didn't get PPP loans with us, are asking that question. It's like, when is it, ready, full force to begin? And I would like to direct that question to Deborah to begin.
Sure. So a lot of banks are on pause right now, and I actually agree with them to some extent because of what Alex had mentioned, that Congress is discussing as we speak more elasticity to the Flexibility Act and the CARES Act in regards to forgiveness. So it's not that you can't apply at this moment. Obviously, we did open the forgiveness portal for lenders if they chose to do so. It's just the process is not, I want sort of calm people's fears and anxiety. The process is not going to happen overnight. Remember, the lender has 60 days to review the documentation and your application for forgiveness. Then it goes to the SBA and we have another 90 days, right? So on top of that, you have 10 months deferred principal and interest. So no payments would need to be made. So I do encourage people to just sort of relax a little. I understand it's very hard. It is, can still be considered liability debt on the business. A lot of people want to resolve that because maybe they want to get a new 7A loan or a conventional loan or whatever, and they need to resolve that. And just for need, right, as human beings, to resolve issues and debt and things like that. So I do understand, but I think you need to wait, listen to what your lender says. If they open next week, great. If they don't, do not panic, because a lot of people are calling our district office and they're panicking. And please do not panic. You have plenty of time for the process to run its course.
Okay, thank you so much. Yvonne, one of the things that I hear most commonly from our PPP customers is, understanding some of the terminology that the SBA is using with the forgiveness. And one of the most confusing, I think, things for the folks I talk to is the cover period. Can you talk a little bit about that, what it is, and how a business can figure out what their covered period is?
Definitely, Laura. I'll definitely answer that question. So your covered period is that time period from the date of the disbursement of your PPP loan that you're going to start incurring the cost that you want forgiven. Let's say you received your loan April 4th or April 6th when PPP started. You had either 8 weeks or 24 weeks from that date to report all your payroll expenses, your utilities that you wanted to use, your interest expense. That's that time period, that 8 weeks or 24 weeks from the date of disbursement. That is your covered period. So all those expenses that you incurred that's related to payroll, non-payroll, that's that time period that we're going to be used to analyze your forgiveness request.
Deborah, anything to add to that? She's got it, right?
No, Yvonne did a great job.
Okay.
Thank you.
Okay. Alex,
Yes.
one of the questions I would like to ask you personally is, you obviously working with the Florida Bankers Association, how do you feel Florida banks are positioned to weather this latest situation that we're going through?
Well, the fear of the unknown is always, Laura, a concern, obviously, and our banks have been helping their customers, since this crisis began earlier this year. And obviously, we'd love to continue to see the unemployment numbers go down. It was encouraging, like I said earlier, that the number for the country went down to 8.4. Florida is about 11%. But when you look at where we were back in March and April at the height of the pandemic, we were well into double digits unemployment, both as a state and as a nation. So it's gone down, but more needs to be done. I think we're on the right path. And so we need to reopen the economy. We need to do it safely. I think other states like California and New York could take a page out of our book on how to do it both and balance it. It's not just about the economy, but we got to deal with the pandemic and the economy. And I think Florida and our nation is on the right track. But that, we're concerned as an industry because, we want to help our customers get through this. But obviously employment numbers are important, income numbers are important, so that, people can repay their loans back. Our banks facilitate this. Our banks are the providers of the capital that makes the economy go. And again, we're a reflection of the economy. Banks do not do well when the economy is not well. So we're concerned, obviously, but I think, together we're going to make it through this and in the coming, days and weeks and months. But I think the economy is opening. That's going to help tremendously as people get back to work. I think that will help strengthen our economy. But yes, there are concerns because a lot of small businesses are still struggling. That's why I'm encouraged, Laura, if Congress can pass this package to create these second sets of PPP loans for those that are really need that help.
Well, I know that, the industry, we're very focused on our margins right now, obviously, with the lower interest rates. And then, obviously our credit quality. I can tell you that we've been very pleased. Initially when, this started, we had, customers obviously entering into forbearance agreements. And for the most part, folks are coming out of those. And I think your comment about employment and getting folks back to work as soon as possible, that's going to be key, obviously, to continue that forward. So we are very encouraged, optimistic, but anybody who knows banks knows that we're cautious. So, again, we're hoping to get things opened up as quickly as possible. So thank you for that. So let's go back to PPP. Alex had talked earlier about how, we're hoping that the government is going to pass some legislation that's automatically going to forgive PPP loans, under a certain threshold being $150,000. So we're all hoping that that happens. And he also mentioned, that business owners really don't have time to fill out all these 3508s and 3508EZs and all these various forms. Deborah, I get a lot of questions from customers regarding, what is the 3508 versus the 3508EZ, and which one am I going to be, which one applies to me? Is that something that you can speak to and help us with a little bit?
Sure. So based on the current legislation today, the 3508 EZ form is utilized if you are self-employed, do not have any employees, so very simple, right? That's an option for you. If you did not reduce your employees' hours or reduce their salaries or wages by more than 25%, that's another option for you. If you experience, this is what I believe a lot of people will utilize this form for this one. If you experience reductions in business activity as a result of health directives, of course, related to COVID, and you did not reduce your salary or wages by more than 25%, you are potentially eligible to use that EZ form. Now, remember, due to the Flexibility Act, we did extend that through December 31st, 2020. So they do have time. That's what I don't want people to stress, if they had to lay off people and now, they're still working on bringing people back. They still have, we just are entering fall now, right? We just finished Labor Day. They have fall, they have winter, they have some time to make that whole again. Their FTE count, based on when they first applied. The other thing I wanted to say is, and I know there's a longer form out there that people are taking about 2 hours to do, hiring a CPA. I understand that more businesses, depending on the complexity of your business and how many people you needed to let go and et cetera, and people also resign. People resigned and people retired. Listen, that happens in the course of the normal business anyways, right? People come and people go, okay? We're not always lucky to have a bond that stays 25 years at one bank, right? So it's normal and natural, and this happens. So I want everyone to relax because, the guidance is fluid. Right now, Congress is speaking. And maybe there may be more changes, and then, there might not be a 3508, right? Maybe there'll be an attestation, a certification, 150 or under. I know a lot of people are talking about that, but I wouldn't rush. I would wait and, see what Congress does, and then make an educated decision on what form you will, need to fill out to get this result.
Laura, can I add to what Deborah said?
Certainly.
I agree with Deborah wholeheartedly. I mean, I think businesses who got one of these loans, you want to repay it. Just wait a little bit more. You've waited all this time. I think a deal will be struck by the end of this month. And I believe it's going to be 150,000 or below will be automatically forgiven, which would, again, take care of 85% of all PPP loans. So, a lot of bankers have called me as well and said, hey, Alex, look, I said, just wait. I think Congress will work something out here soon. So I agree with Deborah on that timeline.
So what happens if there's someone who has already applied for forgiveness and the rules change? Because there are some banks that have taken applications and have been submitting things to the SBA on behalf of their clients.
That's a good question.
So,
I would imagine, Deborah, right? It'll work out, right?
Yeah, so usually, typically you follow the guidance at the date you applied. So whatever the guidance is today and they apply, that's what they would follow. And I would be remiss if I didn't say, there is no 150,000 and under blanket forgiveness yet. We are just talking about what we all, are just sharing what we are seeing in the news as well. So, and I think we're all hopeful that something will come out, a little easier, a little more relief for the small business owner, based on my concurring with Alex and with Yvonne and even Laura. We just need to pause a little and like he said, we waited so long, let's just, wait and see what the enacted legislation is.
Okay. Yvonne, did you have anything that you wanted to add to that discussion?
No, I definitely agree with that. What I've been telling our customers, just like Debbie's been saying, there's no rush. You're not required to make any principal and interest payments on this loan. So there's no need to worry about it. It's 100% guaranteed by the government. Your bank should understand, if you're holding that liability in your books, that it'll be coming off. We're understanding. We know what it is. So don't be afraid, really.
Okay. One of the reasons that I asked that question is I know we have a customer with our bank that they did apply and their loan amount is less than 150,000, and based on the current rules, they're not 100% forgiven. And so by them, being in a rush and us getting the application through, are we, going to be hurting that customer in some way? No. So
That's a risk at that moment. Yeah.
Yeah. Still so much that is.
Well,
Deborah.
I just wanted to chime in. Remember, why are we all saying 150 and under? Why is Congress musing over that particular number? Because of what Alex said. I think I saw 85, 86% that of the loans of PPP were under that amount. I think our average loan size was like a little, shy over 100,000. So we need to be mindful that if you are in that category, I would just pause. And we're not saying a long pause. We're saying about a month. Let's see how this all plays out.
Okay. All right. Well, thank you. The PPP forgiveness. What are the key things that a business owner needs to be prepared? And not all of our loans were obviously less than 150,000. We have, a lot of customers that had a larger PPP loan. What are some of the key things that they should be doing now to make sure that they are prepared for when they do apply, and what kind of documentation? So Yvonne, why don't you get us started on that? And then I'm sure Deborah will chime in a little bit.
Definitely, Laura. Thank you very much. I suggested main thing is record keeping, good record keeping. Make sure that you first identify your covered period. Once you know what your covered period is, start pulling your payroll reports, the copies of your canceled checks that you use for utility payments, the copy of your lease agreement if you're going to be claiming rent as one of your expenses. Have all those things ready. Have the copies of those checks that you paid, copies of the ledgers. Reach out to your payroll company if you have one. Most payroll companies out there are giving all those clients access to those payroll reports that the banks need. I know that ADP out there, there's a drop-down menu on their website, and you just put your covered period, and they produce for you a report that's acceptable to the SBA and to the bank as your backup for your payroll expense. Just like your mortgage interest payments. Have the amortization schedule ready from your bank to show what was your interest obligations for that time period. Have the copies of your bank statements. If you're a Schedule C customer, have your bank statements ready for the time period of your covered period. Just the main thing is good record keeping. Don't rush at the last moment.
Okay, thank you. Deborah.
I concur with Yvonne. I mean, she pretty much covered it. Just be prepared. You have time now to gather all those documents. Some people might want to set an appointment with their CPA, their banker, like Alex suggested and emphasized over and over, have that relationship. If you don't, create it now, right? That's one of the takeaways of the whole COVID PPP, situation, is that there were a lot of people, think about round one, who got finance, people that had all their documentation, their ducks in a row, their financials were in order. They were able to apply first round, right? The ones that sort of, needed to put a P&L together or put, not just a P&L, maybe they didn't have their taxes. A lot of people didn't even have their 2019, not even a draft done, right? So a lot of people just weren't ready to apply. And that's standard, right? Any commercial loan, people try to go to a bank and they don't have any of their financials. That's why I mentioned P&L or balance sheet or tax returns. They don't realize what it takes to get a commercial loan. And remember, PPP is that. It is a commercial loan. It's not your typical commercial loan, but we still needed documentation to back that up, just like you would need at a regular, when walking into a regular bank.
Well, I would personally advise, and I've told my bankers this, I've been saying it now for weeks. Read the 3508 and read the 3508EZ. Everything you need to know is there. Sometimes it's government speak, so you gotta read it like 2 or 3 times, but it really will provide you the clarity that you need, and it will also help you understand the questions you want to ask your banker. So those forms are available out on the SBA website. Also, if you contact your local banker, I know if you contacted my bankers, we would be able to provide you the link, if not the actual forms. So the more prepared you are before you go in and start the process, the easier it's going to be for you. Okay?
And Laura, I just want to say too that let's not forget the SBA 7A program, loan program too. You've got bankers like Yvonne who know it like the back of their hand. And that's a very important loan program. Forget COVID-19, forget the PPP. 7A is what's going to be with us a year or two and beyond. And that is a very important program that the SBA administers for small businesses. And I would encourage all those listening in here today to besides a regular loan at an FDIC bank, to think about a 7A loan from the SBA as well. Right, Yvonne? Wouldn't you say that?
Correct, especially right now, Alex, that due to the CARES Act, the SBA increased their limits on the 7A and the Express programs. Normally, the SBA Express program, the maximum you can get is $350,000. Now, due to the CARES Act, that loan amount was extended up to $1 million all the way to December 31st. Just like your regular 7A, it went from the maximum loan amount of $5 million, it went up to $10 million. Wow. And that's temporary, so you have more access to capital right now until December. So if you are bankable at this time, and just keep in mind, although it's an SBA loan, and this is a misconception a lot of consumers have out there, you still have to have the capacity to repay the loan. If your business is suffering and you are showing losses, unfortunately, we may not be able to help you there. But if you have some other weaknesses, and if you need, for example, a longer period to repay your loan, maybe you cannot make it at a 5-year conventional loan, maybe you could repay your loan in 10 years or longer, that will be the need for the SBA, and that's where they come in. But again, you do need to have the capacity of repayment. I also want to add in to what Laura was saying, in addition to the 3508 applications, the SBA and the Department of Treasury also have posted FAQs, which they're proposing a bunch of questions that they think customers may be asking, and they have the answers to those questions. That will also facilitate the business owners when filling out the PPP applications. That's available on the SBA website and also in the Department of Treasury's website.
That's very good. Thank you for sharing that.
Sure.
So based on what you all were talking about, Alex brought up, the other SBA loans that are available. One of the questions that I'm hearing from customers is, they didn't get a PPP loan. They didn't believe they needed it at the time. And now, they're feeling, that they need some additional, some options. Now, Alex, you were talking about there possibly is going to be a third round for those businesses that can show, that they've been significantly impacted. Is there anything else that's out there that's available now that we can direct a business owner to if they are, struggling still?
I know in Miami-Dade County, there's a program called RISE. There's it's not in Broward or in Palm Beach, so maybe it's a moot point since we're in a Palm Beach chamber. I know that's a program that the county is offering. That's in addition to maybe there is the express loans, but I'm not sure what else is out there with government-wise.
Deborah, anything?
Sure,
Debbie?
I can take that and I can let everybody know our SBA overall COVID debt relief programs that we have out there. So first of all, I would encourage people to consider applying for the EIDL loan, the Economic Injury Disaster Loan. That particular program is around $150,000, and that is based on 2019 tax returns. So you would need to provide that information, as well as it's used a little differently than PPP. So it's used for monthly operating expenses. It's not for a startup. So you had to be in business prior to January 31st. 2020 operating, of course, can't be pre-revenue because the situations are going to look at 2019 tax returns, and if you had no revenue, you're not going to get, approved. However, that could assist many people, and it really, really has. So it can pay all your fixed monthly debt, your payroll, accounts payable, stuff like that. We do have our SBA Express Bridge loans, which is sort of like a micro loan, $25,000, fast turnaround, can be refinanced in full while you're once you get the EIDL. So while you're waiting for EIDL, you can apply for that bridge loan and then get that, refied out through EIDL. That's a possibility. Have our CA program, our Community Advantage, and we added CARL, RL to that since government loves acronyms, right? So it's called the Community Advantage Recovery Loan Program. Now that program is ending October 1st. So if you're interested, you need to hustle on that. And that program, if you do get, approved for that, there's a built-in technical assistance. So we would help small businesses get the one-on-one coaching, business coaching and how to pivot and carve out new revenue streams. And there's a little more hand holding, and that would be $50,000 to $250,000. That's our CARL loan program. And let's not forget, I know Alex mentioned one of our flagship programs, 7A, but we also have our 504 program. And part of our overall debt relief is if you close, fund, disperse by September 27th, and I know that's 10 days from now. However, there would be 6 months principal and interest payments that you would, get some deferred payments on that, a little more relief. I don't know, Congress is aware that that's ending September 27th, so that could change, that could be extended, who knows? However, if you've already if you've already applied to a bank for one of those programs, just be mindful that, keep on top of it, provide your banker with all the necessary documentation so you potentially could close before that 27th date.
Okay, so there's still lots of options. And then hopefully, as Alex says, when the legislation, gets through, there'll be some additional opportunities for PPP. So Deborah, you mentioned the word EIDL, and there's all kinds of questions around EIDL loans and if an EIDL advance was received and how that's going to impact forgiveness. So Yvonne, why don't you kind of talk to that a little bit? Because I know you've educated me on numerous occasions. So why don't you take that on?
I definitely will, Laura. Thank you very much. So I know you all applied for the EIDL loan, and you may have received an EIDL advance anywhere from $1,000 to $10,000, and you were thinking that probably was a grant and free money. You have to keep in mind that when you do apply for the PPP forgiveness, and you did receive an EIDL advance, when we receive your forgiveness amount from the SBA, that EIDL advance will be deducted from your forgiveness amount. Let me just give you an example. You received a PPP loan for $100,000 and you received an EIDL advance for $10,000. When you apply for forgiveness, the bank will receive only $90,000 because they're going to be reducing that $10,000 advance from your PPP forgiveness. So that 10,000 will have to be repaid to the bank. Deborah, am I right?
Anything to add on
Yes,
that?
yeah, that is correct. So some people, unfortunately, there was a little misunderstanding on the purpose and the spirit of the legislation with idle advance. So I like to put it, the idle advance was to advance people the payroll needed while they're waiting for their PPP loan, right, to get approved. So quickly, right, just like we rushed together to help our economy, help our small businesses, we put together this legislation. I say we, right? It's all taxpayer funded, and the people we nominated to go represent us in Congress, they all looked after us, right? So, and I'm a former business owner myself, so believe me, I know. I went through the 2008 recession, so a lot of hard lessons that I learned personally that I bring to the table today in my role with the SBA. So that particular program, the idle advance, which all the funds are exhausted at this time. So you can't apply for that, but the idle program is still available. Some people don't understand those are two different programs. I wanted to delineate that. However, the idle advance was $1,000 per employee up to 10,000. So it was just to advance that payroll. Now, if you did get it, okay, and some people got that and then it got the idle and they never applied for PPP, and it's a moot point. That became a grant. Here's where people didn't understand. But if you got the PPP and you got the idle advance, you could have got all three, right? Could have got the idle advance and PPP. We have a lot of people who did in fact take advantage of all the programs out there by the federal government and SBA. However, that advance would need to then be rectified at forgiveness. And it's not your bank that's going to make that decision, okay? The bank will render a decision on the forgiveness piece, but then the bank will submit it through our electronic portal that we've created to the SBA, not me, district office. I don't have approval power, right? So don't send it to me. You wouldn't believe people have sent me their PPP loan applications and the forgiveness applications. Please do not send it to district office, right? Your lenders are the lender of record. So then the SBA will make a determination. If you did get that advance, then you will need to resolve that advance at that time through your PPP forgiveness stage.
Well, and I'm glad you said what you said regarding don't send me your application. I think it's important for everyone to also know that the bank that took your PPP loan application and did that for you, they're the ones that have to do the forgiveness. I've had a few people come to me and say, you know, that they've gone to a different bank, you know, to apply for forgiveness, and I'm like, you know, you're not going to be able to do that. If you started with Bank A, you're going to have to finish with Bank A. So I'm glad you brought that up, Deborah. So we're going to come back to the PPP, but I wanted to talk a little bit more about the Florida Bankers Association. I think a lot of our audience probably didn't even know that that organization was out there. And so, Alex, I was hoping you could talk a little bit about the Florida Bankers Association, you know, what's its purpose? And then when this whole pandemic hit and the economic crisis hit in Florida, you know, what did you and your team do to really start helping our great state of Florida?
Thank you, Laura. Look, I'm the third CEO in our 133-year history. We were formed in Jacksonville, Florida on the 28th of February, 1888. And our mission is to help our bankers in the legislative and regulatory arena so that you can better serve your customers to enhance the economy. Because when bankers are all about the economy, the number one mission of our bankers is to enhance the economic vitality of your customers. You want to see them do better. And there's nothing more rewarding to a banker than to get a letter, 5-10 years down the road, when that small business owner got his or her first loan to start that small business. And now they're up to 50 employees, 100 employees or more. And there's nothing more rewarding than that for our industry, because that's what we want to do. We want to provide the capital to create homeowners and to create small business owners. So what we did at the FBA, Laura, we did over 35 webinars with thousands of Floridians. And I had a 7A and SBA expert with me in our industry to help me with the technical issues. But we did it with mayors around the state, with members of Congress, and they had hundreds and hundreds of their constituents who were small business owners in those early days of the PPP process on what to do, how to apply, how to qualify, what's the criteria. And we did several in South Florida. It's probably our heaviest area with members of Congress, mayors, and that was so important to get the word out, because we did one with the one of the chambers in Western Broward County, and I remember talking to Denise Grant, Commissioner Grant in Western Broward, and I think many of our banks, I know Amerit helped us, Yvonne helped us, where we got PPP loans to 150 African American small business owners who for whatever reason, did not get the education, did not get the information on the program. And through Commissioner Grant's leadership, we got banks in South Florida to help those small business owners with those PPP applications that were processed in time before the expiration date. So that was very satisfying to help small business owners, not only in that example, but throughout the state of Florida. So that was our goal, was to get the word out. And we also did it with professionals. We had webinars with the CPAs of Florida, with the doctors of Florida, with the dentists of Florida, et cetera, et cetera. And we wanted to make sure that they knew that they should go to their FDIC bank in their community to apply for one of these loans. And then again, Deborah was simply fabulous. She was always there for us, especially in those early days, Laura, where there was so many questions. And, the SBA was building the airplane while it was in flight. So think about that analogy. And it was tough. Those were tough days, but our goal was one and the same for the SBA in our industry. Let's help small business owners survive this crisis.
Well, and, not only did the Florida Bankers Association spend a lot of time educating the community and small business owners, I also have to give a shout out because you spent a lot of time educating bankers. This was all, very new to us, as well. And, we're learning as we go. And the Florida Bankers Association, has been a great resource and help to us along, obviously with the SBA. And so my last question, I guess for Alex, is, so the general belief is financial services industry is supportive of additional fiscal support for our small businesses. And you're lobbying to help with that. Can you talk just 1 minute more on that, as well as the importance of maintaining your partnership with your banker? That's a critical comment as well.
Thank you, Laura. Look, yes, I'm constantly on the phone. I wish I was in Washington, but due to the circumstances, I haven't been able to go here since the beginning of the year. But I feel like I've been there because I'm on the phone a lot with Washington, and we like to see that deal struck this month. And Democrats and Republicans need to work out a deal. They know they do. I know there's differences philosophical on both sides, but they need to work those differences out so we can get this help to our small business owners across our great nation. And again, one of the lessons learned that Yvonne mentioned, Deborah mentioned, you did as well, Laura, was relationship banking is here to stay. It's very important to have that relationship. So to every small business owner, reach out to your banker. If you don't know who your banker is at your bank, find out who's assigned to your account. That person needs to be your person you call whenever you have any questions or any signs of trouble or challenges. Because if you're not satisfied, look, we have a very competitive banking industry in Florida and in our nation. If you're not satisfied, and then go to someone where you will get satisfaction, because relationships matter, and you need to know your banker and they need to know you. So that's very important. And our industry did a great job of helping so many. As I mentioned earlier, we were #2 in the nation in the total number of approved PPP loans. That's because of the hard work and dedication of our bankers here in Florida. So looking forward to the next couple of weeks, Laura.
Well, and I thank you so much for your leadership, Alex.
Thank you.
So Deborah, Yvonne, last couple comments on PPP. You're telling everybody, don't be nervous, stay the course, get organized. I'm saying read your 3508, read the 3508 EZ. Any last recommendations for our viewers?
Besides having patience throughout the process, understanding that legislation may change, understanding that it's very fluid, that's my biggest recommendation. Work with your banker, work with your bookkeeper, make sure you have all your paperwork in order, and just, your banker's got you. Your banker's got your back. So that's one thing I gotta tell you.
Thank you, Yvonne. Deborah?
So another suggestion I have while you're waiting on your PPP loan forgiveness process to play out, we are at the South Florida District Office doing a series of workshops called Campaign SBA. And this is a series of workshops that are going to focus on surviving and thriving, not closing. So if you're interested, you can go to our sba.gov/South Florida. And we would be happy to have you join some of our workshops to really pivot, carve out a new revenue stream, hear what other small businesses are doing, get a little financial literacy tips, and that's all. So continue with your education on how to grow your business. Our SBA loans, right, provide a vital economic, support to small businesses to help them overcome the temporary loss of revenue during these trying times. So we're here, not just during disaster, but we're here for the long haul.
So with that, I want to thank you all so very, very much for your participation, and please stick around, and it's my pleasure to begin to introduce Mr. Parrish. So thank you again, Alex, Deborah, and Yvonne. Thank you so much.
Thank you.
So it is my pleasure to introduce Dr. Jerry Parrish. Dr. Jerry Parrish is the Chief Economist and the Director of Research for the Florida Chamber Foundation. In that role, he is responsible for conducting in-depth analysis on the Florida economy and on solutions to help secure Florida's future. Dr. Parrish previously was the Chief Economist and Director of the Center for Competitive Florida at Florida Tax Watch. Prior to that position, he served as the Associate Director of the Center for Economic Forecasting and Analysis at Florida State University, and has many years of experience in the private sector in management roles at international manufacturing companies. Dr. Parrish is currently an adjunct instructor and in the Masters in Applied Economics program at Florida State University. He earned a BS in Agricultural Business and Economics from Auburn University, an MBA from Bellarmine University, and MS in Economics from the University of North Carolina at Charlotte, and very educated, and a PhD in Economics from Auburn University. He regularly publishes research reports and articles on the Florida economy and Florida competitiveness. It's great to spend some time again with you, Dr. Parrish, and I'm going to turn it over to you. Thank you so much.
Thank you for having me, and appreciate the Central Palm Beach County Chamber and what they're doing to help get information out there to help businesses around your area. I want to talk about a couple of things today. We always like to talk about data here at the Florida Chamber Foundation. We're certainly going to do that. I'm going to show you where to get it, and I'm going to tell you what I see in the data and kind of what the near-term future of Florida looks like. I'm going to show a few slides. You can't have an economist without a few slides. So I'm going to kick those up and hope that you guys can see those. But I want to tell you, we've been working on recovery of our economy in Florida since March, when things started to go bad. We saw what was happening out there. So we've got a whole project that we've been doing with our local chambers around the state called Relaunch Florida. I won't talk a lot about it, but I do want you to know that we've been working on this for quite a while now. Now, I want to talk about the data, where you get data to find out what's going on in the state and your community. We have the Florida Scorecard. This is something that I helped develop the new version of this when I came to the Chamber Foundation about 5.5 years ago. And it's free to use. There's hundreds of thousands of pieces of data literally on this. And you can see what the front page of the scorecard looks like today. You know, you got to remember, before all this COVID stuff started, Florida had a $1.1 trillion economy. And if we were an independent country, we'd be the 17th largest economy in the world. And that still surprises people when I say that, but Florida is a big deal. You know, we had a $1.19 million worth of adjusted gross income moving to Florida every day, every hour of every day, 365 days a year. And I put up there BC, that means before COVID, we had about 900 net new people a day moving to the state, is over the average over the last few years. I'll talk more about that and what I see happening later in the presentation. I do want to say our unemployment rate kicked up a little bit. We got the latest job numbers. Actually, the August job numbers we'll get tomorrow morning at 10 o'clock. So I'm anxiously awaiting those. You'll see those change if you look at the Florida scorecard. You can see the state level. But what's important here is we got 1.13 million Floridians looking for work right now. That's the number of unemployed people. And obviously that's way, way up from what it was back in February. Now, the unemployment rate is really probably over 11% when you think about it. The U.S. at 8.4% in August, but Florida is already that high. So that means our unemployment rate's a little higher. It's a long story about why it's probably higher than that here, but it certainly is. When we look at Palm Beach County metrics here, every single county has a front page, and then all the 6 pillars across the top, you can see, there's extra data on them. But you can see the number of cases here, the number of unemployed people in Palm Beach County. Average new cases is 138.6 a day. That's red. That means it's going down. Or it actually went up, but it had been going down substantially. I'm going to show more of that. But 98,000 jobs year over year less in Palm Beach County than there was the year before. That's important. The unemployment rates, you can see, y'all are just a hair above the Florida average. You can see you're not nearly as high as some of the areas that have much more dependence on people from other states and other countries. The average daily COVID cases is important, but it's not the most important metric now. Really the number that's important is the number of cases in your county and the hospitalizations. Hospitalizations are going down substantially. You can see that the average daily cases as well, we're up over 700 cases a day back in July the 25th, way down now. A little over 100 right now. That's really good because, that indicates that we're doing much better. You can see that this is a Florida number. The currently hospitalized around the state is way down. We're at about 1/3 of what we were in the past. So that's all good news. But what's it doing to the economy here? This shows you by category of where the job losses have been. Year over year is what this shows you. Nearly 500,000 jobs less this time than we had a year ago. with more than half of them in leisure and hospitality. I don't think that's going to surprise anybody, but the percent of industry number is important there. You know, that minus 20.3% means that there are, you know, 1 out of 5 leisure and hospitality jobs that we had this year are gone now. And that's a big part of the number of increase in unemployment, you know, and unfortunately, that's the last industry to come back to 100%. When you look at the bottom here, construction's only down slightly. It actually had been above up until this past month, you know, on a year-over-year basis. The only one that was in positive territory. It slipped just a little bit to negative territory, but still, that's a good sign. You know, what's happened is some of the construction projects were accelerated. You know, companies that had contracts to fill were accelerating. They were adding second and third shifts to spread out their workers on the job site to cut down on potential COVID transmission. And if you take a look at people like pool contractors and kitchen remodelers and those kind of folks, they're actually doing better than they ever have in a lot of cases. I talked to some of those companies, and with people spending so much time at home, home improvement has become a bigger and bigger deal. And I talked to somebody the other day when I was giving a speech. They told me that they tried to get a pool put into their backyard, and there was more than a month wait just to get an estimate on putting a pool in their backyard. They're cooped up with their kids. They want their kids to have something to do. And so they wanted a pool. So those kind of things are happening. I think if you look, for the most part, from the bottom to the top, we'll show you the industries that will come back the quickest, with one exception. If you look at the third one from the top, trade, transportation, and utilities, utilities haven't seen much of a change, if any. But wholesale and retail trade are in there, and certainly retail trade will be next to the last, you know, industry to come back to full speed where we were back in February. And then leisure and hospitality will be the final one. You know, we've got to have people traveling and comfortable with traveling again before we're going to get back to 100% of our job numbers, no doubt. Now, when we look at the year-over-year job change by metropolitan statistical area here, you know, you can see that Miami, Fort Lauderdale, West Palm Beach is the number one, you know, as far as the drop in jobs. But when we move it to the county level, you can see here that it's a heat map on percentages. So the darker areas have suffered the highest percentage. You know, higher certainly down in Miami-Dade and Osceola County and some of them. But that, you know, that means that, you know, we need to get those people certainly back to work. That's a big issue. It's a big drop on our economy. Certainly we've lost tons and tons of state and local tax revenue because we don't have those tourists coming in from other states and other countries. You know, they're responsible for about $6 billion in state taxes and more than $5 billion in local tax revenue. And so where you see the worst job losses, no doubt, is those counties and those areas that are dependent on those tourists to come from other states and other countries. I was glad to see Visit Florida change their marketing program to talk more about, you know, having visitors do staycations. I was listening earlier to this event before our panel started at 11:30, and I know they were promoting staycations and eating out, and certainly I appreciate that. You know, that's good for our local businesses. You know, we've got tons and tons of very small businesses like small restaurants that really give that nice diversification of your choices when you want to go out on the weekends or go out at night or go out to lunch. You know, we're going to lose quite a few of those businesses. There's no doubt about it. They probably won't be able to stay in business. So your support of them certainly does go a long way. Now, I want to talk about, you've seen the map that, you know, the COVID-19 has affected the economy, certainly different counties, different ways. But it's also been a thing about, you know, different industries as well. So different counties and different industries. You know, you can see in Florida here, we've actually increased high wage jobs since January, and most people are shocked by that. But you can see the middle wage jobs down 2.5%. The low wage jobs is really where things are people are getting hurt here. It's typically those lower wage service industry jobs that depend on tourists, and that's been a major issue. Now, when we look at the U.S. and compare it against that, you can see actually the U.S. As a whole lost jobs in every single category. So what's clear to see here is Florida has actually fared better than the U.S. when it comes to job losses. Yes, our unemployment rate is a little higher, but unemployment rates are really an indicator of people out looking for work. It's not. We've had people come back into the workforce that weren't in the workforce. Maybe their spouse got laid off, or one of their housemates or whoever. So they're coming back in the workforce. So I'm not saying that the unemployment rate is not important. It certainly is. But you got to remember that when people have hope of finding a job, when you're going into a recovery, they actually come out more. They get counted. And therefore your unemployment rate goes up. So it's not the be all and end all of metrics. Actually, the number of people working, I like as a much better metric here. But here's something that is really important, and I want to show you this in Florida. These are the latest numbers I could get my hands on here. When we look at the small businesses and break them down in a category, there's a lot of them that still are not open. They were forced to shut down. Maybe in a lot of cases, they still have plans to come back. Some of them will not make it, but some of them will. And take a look at that. We lost 12.7% of our education and health services job. At first, it was actually a lot of health services job because we had dentists shut down, and we had no elective surgeries and those kind of things. So we actually had a lot of medical workers who were not working. Now that's no longer the case. The majority of those numbers now certainly are in education. Retail and transportation, probably no surprise that job numbers are down there, just a little higher percentage there. Leisure and hospitality, you can see that actually a lot of them open back up. You see around June, around July. But, them dropping out and continuing not to be open this fall probably means there are quite a few of those that are going to be shut down permanently. And that's a big deal. That's a big part of our industry here and industry mix here in Florida. Now let's compare it to the U.S. Actually, Florida I think I probably dropped out here a second ago is what it looks like here. I'm going to reshare my screen here and apologize that that's happened. Looks like it's an internet problem here on my side. But anyway, here's what's happening in the state of Florida. You've seen some of the things that are happening to the economy. And remember I talked about before COVID, or BC, as I'm going to start calling it now, we had about 900 net new people a day moving to Florida. And certainly people move in, people move out. So what I've done to show you here is the last year that we've got good data for, 2018 data. This is an average year of recent years. Where are people moving in from the state of Florida? Because this has a big effect. It doesn't just have an effect on the economy. It certainly has an effect on towns because people from different parts of the state or different states move to different parts of Florida as a general rule. So I've plotted this in here, and some people are shocked by this, but on net, we lose people most every year to Georgia and South Carolina and other states, other southeastern states. Now, you may ask, why is that? And I lived in North Carolina for a while, and we had a loving term that we used up there for the Northerners who moved to Florida, figured out it was too hot for them, and then moved back, moved partial way back and moved back up into North Carolina. So we called them halfbacks. That's not really a derogatory term, I don't think, but they moved halfway back home because so many people of them were originally from Pennsylvania and North Carolina, or in New York and New Jersey and those kind of areas. But you can see we do lose on net population of them. We lost it to Texas. We gained all the numbers that are positive. We gained from those states. And you can see the top 7, all the states on net that sent us more than 10,000 people in 2018. And that's the latest data available, are listed there. So New York, New Jersey, Pennsylvania, it's in most cases here the high tax states, and we've known that is what's happening here coming to the states. But remember, those folks are bringing $1.19 million of adjusted gross income every hour of every single day to Florida. That's important to us because you got to remember Florida runs on sales taxes. About 79% now. Florida's general revenue comes from sales and use taxes. So it's in our best interest to have people, jobs, making more money, as much money as possible, and spending it on taxable goods here in the state of Florida. It's the reason those and the visitors is why we don't have a state income tax. So that's a big deal. We need those people, the higher income people coming down here, and certainly we get them. And typically, the New York and New Jersey people move to the east coast of Florida. The Midwestern people typically move to the west coast of Florida, although there are many, many examples where that's not the case. But, that's just one of the things that's going to affect us. A lot of those people were moving down here for jobs. They may be retirees. Certainly we got a lot of those. A lot of wealthy retirees moved to Florida. But I believe we've slowed down to probably somewhere between 200 and 300 people, net new movers to Florida. They're still moving. It's just not in the high numbers that we had. Certainly, we're still getting them. We're getting them here in Tallahassee. I talked to a young lady that moved down here from Minnesota. She had been laid off. She used being laid off and the extra $600 that she got from the federal government for being laid off to move her family down here to Tallahassee. And, she did it during the middle of July and told me that she actually enjoyed the heat and humidity. So it's happening even here, but it's certainly not happening as high a rate as what we are. What are the other factors that, that are affecting Florida's economy and what's the Florida Chamber doing about it? One of the things we came out with a little over a year ago was our Florida 2030 blueprint. And we went around the state. We went to every single county. We engaged more than 10,000 people live in rooms. And I suspect that some of the people here that are listening to this were involved in some of our town halls that we had around the state. What we've done at the Chamber Foundation is laid out 39 goals of things we need to do to make Florida not the 17th largest economy in the world, but to move it up to the 10th and have prosperity for people at every zip code in the state of Florida. Now, one of the things that we've been concentrating on, and you saw it on the front page of the Florida scorecard, is that goal of having 100% of Florida's kids reading at grade level. This is, most people don't think about, education as one of our top recruitment tools for recruiting businesses and economic development, but it actually is. And so what we did, and we just released this within the last couple of weeks, we released what we call the Florida Gap Map. And what it is a map to show every public school in the state of Florida by county and the zip code of where that school is located and the under 18 poverty rate. And so if you go to the floridagapmap.org and pull down Palm Beach County, this is exactly what you'll get. You'll see it's alive. It's an interactive tool. And it literally is the first one in the country. Nobody's done this anywhere that we've been able to see. And I want to tell you why we did it. It's, third grades typically go from where kids go from learning to read to reading to learn. And so it's certainly an important milestone in their academic career, and it's an indicator of their future success. So when you go to this website, you'll see a couple of things. One is if you lay your mouse over a zip code, you'll see the number of kids living in poverty and the under 18 poverty rate. And I've just picked one at random here, 33407, 2,296 kids in poverty and 34.6%. And you can see those dots all around. The dots show the third grade reading scores. And I want to be clear about what that is. And I want to be clear about something else too. You'll see a dot that says 55 on it. Over there to the left of the little pop-up that said, that talks about the zip code. That means 55% of the kids in that third grade school, 55% of the third graders are reading at grade level or above. Doesn't mean it's a bad school if it has a low score. Matter of fact, some of the best schools we have in the entire state are schools located in rural or, areas with high child poverty. And, in some cases, if they get, 35% of their kids reading at grade level, that's a great accomplishment for them. So don't take a look at this and think that a school with a low score is a bad school. Now, if you do lay your mouse over one of the schools, and I picked one in that same zip code, just so you could see, how it matches up. This Northmore Elementary School, 36% of their kids are reading at grade level. That means 64 kids are not. So that must mean they have 100 kids in that school. We've got those school numbers as well. But this is really a way for the business community to get involved on improving Florida. Yes, the COVID situation is bad. We need to do everything we can to get keep our small businesses in business, to help them. And I appreciate what the chamber's doing down there. But we have to remember that we have goals for 2030, and we can't let up for those, and we're not letting up on those here at the Florida Chamber Foundation. So this is just one more tool we're using in our Prosperity Project, and it's available free. It's available on the Florida Chamber website or that, floridagapmap.com. Now, we work on prosperity every day. I want to talk about one of the concerns I have, and it was mentioned earlier in here. I'm going to stop sharing my screen here and just talk here for a couple of minutes. When I was listening earlier this morning, we were talking about, they were talking about Amendment 2, and that's the $15 minimum wage for the state of Florida. I've done an extensive bunch of research on this, and I teach it at Florida State University. I teach in the Master's in Applied Economics program. The great thing about that program is I have free grad student labor to do what I need them to do to solve problems for the state of Florida every single year. So this past year, I had a group really do a deep dive analysis on what would happen if Florida does pass this amendment. I want to remind you that I'm not going to make a political statement here. I work for the Florida Chamber Foundation. We're a 501c3. We don't do political stuff. And so I'm not going to make any political statements at all. I'm going to tell you what an economist sees when we're thinking about doing something like this. I will tell you the Florida Chamber's against Amendment 2. One of the main reasons is it could be done or could have been done legislatively. And the Chamber's, position is absolutely, if it can be done legislatively, it does not belong in the Constitution. Because once you put something in the Constitution, it's hard to take back. And in this time frame now, we've got 1.13 million Floridians out of work that we're trying to get back to work. And, passing the $15 minimum wage amendment is something that's going to absolutely affect the job market. You can expect an economist would say these two things. Prices will go up and jobs will be lost. And that's absolutely going to be true. When my grad students took a look at this, they said they calculated it could be as many as 500,000 jobs lost by the time this amendment would get fully implemented. So, but my look at it is a little deeper. I look at it from the prosperity look. A couple things are going to happen is, for somebody to have a job at $15 an hour, they have to be worth $15 an hour to their employer. If not, they're going to be automated away, or they won't have an opportunity to get into the job market. And I think that's the biggest issue here. When you set an extremely high minimum wage, compared to the next state over, this is Florida doing it by itself. This is not Florida and every other state doing it at the same time. What happens is people will, companies will move across the state line. We know that's going to happen. But really what it does is it puts people in a position where they have to get $15 worth of skills, $15 an hour worth of skills to even be employed. And my concern as a part-time educator over here at FSU is what happens is it really distorts the perceived returns to education. And I'm going to say that again because that's a big economist mouthful. Let me put it this way. If you're a high school kid, you're thinking you're about to graduate, you're probably pretty sure of yourself that, hey, I can make $15 an hour. I'll get one of those jobs. What you may not realize is you may not be working full-time, and those people that were working full-time may get moved to part-time and lose their benefits. What I think about is, will you invest in that associate's degree or certification or, whatever kind of job training that you want to get out there in the job market and then move forward. If you think you're going to get a $15 an hour job, you may not do it. And so my concern here is Florida will end up being less educated if this thing passes. So I'm not going to talk more about that. It's been a real popular topic. I think you're going to see a lot of it. But honestly, I'm going to leave you with this. It really, something like this, high minimum wages, much higher than the market, really hurt the people that they're designed to help. They hurt the people with low skills, and that's typically low-income people with low skills. So, that's my take as an economist. I know the Florida Chamber would encourage you to vote against it. I'm not going to do that. But, it is something that is a concern as we got 1.13 million people out of work here in the state of Florida right now as we go into this fall. The easy job numbers have come back. We lost more than 1 million. We got 500,000 jobs back over the first 2 or 3 months. But that next 500,000 is going to be a lot tougher. It's going to be a lot slower. And, certainly we're going to be at the end of probably 2022 or so before we recover all those jobs in the state of Florida. Anyway, that's what I wanted to say. I appreciate the opportunity to come here. And everybody is free to contact me at the Florida Chamber Foundation anytime. If they want more details, want to know more about this Florida Gap Map, I encourage you to use that and show that to folks around the county. And, let's help those schools. At the Chamber, we would ask you to adopt a classroom and help those kids learn how to read. That's one of the best economic development things that we can all do together. But thanks for having me today.
Thank you so much, Dr. Parrish. We always appreciate your information. It's very valuable to all of us. And thank you so much to the Florida Chamber and all that you are in the foundation for all you're doing to help us through this pandemic. You've been exceptional, so we appreciate it. And I want to thank our last panelists. I want to thank Alex Sanchez for a great presentation earlier, and Yvonne and Deborah for participating. Great job by all of you. Again, Laura Trosclair, our executive board member, thank you. You've been a great MC for the whole Progress Palm Beach County event, so we thank you so much. And I want to thank all of our panelists and moderators throughout the day today. We really appreciate it, and especially to all of you who have been on since the beginning. Many of you have stayed on through the whole Progress Palm Beach County Summit, and we hope you found a lot of valuable information. One last time, I would just like to thank our presenting partner, Amerant Bank, our corporate partner, FPU, Florida Public Utilities, and Lynn Casella, who is also on our executive board as a member of Florida Public Utilities. Thank you to Minto Communities as our community partner and our Progress partners, CEO Financial Services and Wellington Regional Medical Center. Thank you all so much for your support of this event. We thank all of you for attending. Those of you who are on Zoom and those of you who are live on Facebook, thank you so much, and we'll see you all next year. And don't forget to check our website at cpbchamber.com. We have an event coming up in October, our education forum. That'll be virtual, as well as our annual Farm City event will be virtual this year in November. And we'll be featuring Ag Commissioner Nikki Fried. So hope you all join us for that, and you all have a great day. Thank you again, everyone.